So tonight we're going to talk about strategy. Um, we are going to discuss exactly how to formulate a strategy, how I formulate a strategy, and I'm going to give you one of my own so you guys can go ahead and trade on your own if you decide to. We talked about how to get into day trading on day one. We talked about technical and fundamental analysis on day two. Day three, we're going to talk about strategy. So now, within 3 days, you guys have a complete approach to day trading that could help you make your first dollar. Now, it's a double edged sword. It can also give you just enough information to make a lot of big mistakes and lose a lot of money. But it's up to you how you plan to trade outside of this. Are you going to find accountability partners? Are you going to find a team? Are you going to trade with people who actually know how to keep you accountable to your rules? Or are you just going to be accountable yourself? Or, even worse, you are going to trade by yourself and what? You don't keep yourself accountable. You lose all of your money. Today, the 3 day lessons that you just learned were the three worst days of your life because why'd you even get into day trading if you end up doing that thing? So, double edged sword. However, I'm going to teach you a strategy that has proven back tested work and can make you money. So, tonight, I do want to have a proper disclaimer. Guys, I'm not telling you exactly what to buy. I'm not telling you exactly how to trade. I'm simply showing you something that has worked for me and that has back tested results to prove it. I will also tell you that this strategy, this newer one I'm gonna show you guys, I've only been using for about a month. Now, if I used this all of last year, I would have made a lot of money. But I am still in its incubator stage. I have a weird process of putting a strategy in my tool belt. I have to have back tested results, proven profitability, and then I have to put it in an incubator account. I put $2,000 in. I wait to see how long it takes for me to get to $5,000, $10,000. I look at that data, and then I realize, okay, is this a gain or is this a strategy that I want to utilize either in my day-to-day operations or in my fund? I did this with a liquidity trap play back in October. I did this with the PC intraday short 2 years ago. This is the newest one that I've been kind of looking at, and I'm going to teach you guys tonight. Now, I've not been trading this exact strategy for years. However, I totally understand why it's profitable. So, disclaimer, I'm not telling you what to do. I'm showing you what I am doing. We good? Can we have a little verbal thumbs up, guys? I'll drink to that. Cool. Sean's like, yup. Heck yeah. Randy, Colin, we're good. So, next thing. Let's talk numbers. This class, I'm really, really excited to teach because I made this lesson today. And there's a lot of things I've been wanting to talk about, and the numbers is the most important thing. Okay, when I say let's talk numbers, I'm talking about win percentage. What's the other number that matters? Technically, three numbers that matter. Now, what are the three numbers that you look for in a strategy? I will be utterly shocked if anyone gets the last one. Honestly, if someone gets the last number, I'll give them several free months of our new trading journal. Sean, R to R. He did get number 2. What's the last one? So what's the last number that matters in trading? Can anyone guess? I'll give free merch too. I'll give you free premium. Losses? Nope. I mean, you could bend the rules to say that, but there's more to it. The question is, profit factor is a good one. I wouldn't say that's not necessarily a number that I shouldn't care about, but that is derived from win percentage and risk reward. Pia, is that you verbally raising your hand? Again, the question was, what's the 3 most important numbers when it comes to creating a strategy? Most trades of the day, how much risk, probability. Oh, Bro wants free merch. No, okay. So I'll let you guys do one more. PE ratio, nope. Stop limits, nope. I'm owed a quarter zip. Dog, if you want something, DM me. Okay, so last one. Boom! Will got it. So Will, if you want either free month of premium, I can talk about free merch, or I can get you one, exclusive access to our little gift we're going to give to some people at the end, but I could personally onboard you. Or I'll throw a free one-on-one. Whatever you want, just DM me. We'll figure it out. It's actually Drawdown. Drawdown is the last number when it comes to creating a strategy. Now, the reason why Drawdown is important, well, we're going to get into that in just a minute. But let's talk win percentage. I have had a long account where my win percentage was 36.84%. 36.84%. So I lost. I love saying this, but I hate saying this. A quarter was right more than I was. I flipped the coin, and technically 50% of the time, a quarter was more correct than I was. But I still made money. What? How can you make money with a 38% win percentage? Honestly, I made a fair amount of money. Profit factor looked pretty good. 1.3 to 1.33. And it was because of my risk to reward, because they go hand in hand. My average loser was $800. My average winner was $2,000. So, even with a 36% win rate, I still made money. Absolutely crazy. Now let's talk about something else, another number. Well, we'll go down in just a minute. The reason why win percentage in and of itself is not important is because it does matter what your risk to reward is. Guys, there are venture capital funds where their win percentage is 2%. A 2% win percentage. 2. But their wins are catastrophically so much bigger than their losers, they make money. And a lot of venture capitalists can make tons of money. There's tons of venture capitalists out there that make tons of money. But the point is, win percentage in and of itself does not matter unless you have its pairing number. And that is risk to reward. But the point is, you can have a win percentage of 99% and lose money. And you can have a win percentage of 1% and make money. Well, let's look at another number. I have another account that I was tracking for a little while, and I had a decent loss in this account, and my win percentage was a 75% win rate. So 3/4 of the time I was correct. That's pretty good, right? I mean, 3/4 is, I would say, is fairly impressive for a win percentage, but my win-to-loss ratio was so bad to where I was barely profitable. After about 100 and almost 200 trades, I made $800. Yikes. So the point is, win percentage is important, but it's not important without risk to reward. They are both vitally important. So here's the thing. The last thing I want to talk about is number 3, drawdown. We're going to talk about this strategy a little bit later on this crazy percent gain, but there's really one number I want to focus on, and that is your drawdown. What if, before you made it sky high and your account skyrocketed, you blew your account first? Think about it. There are strategies that have and there's an element of luck here. There are strategies that have consistent, profitable numbers that can make you millions of dollars. But if you have too much risk on your account, you will increase the amount of drawdown you'll have, and your account will go to zero before it skyrockets. You could be testing a strategy, and your account you could blow your account right down to zero, every dollar you had left, and it could still be a profitable strategy. You're like, what? Well, let's go back to the venture capitalist example. Well, most venture capitalists, a lot of them can fail because early on they have too many losses. Okay? So, even venture capitalists have what's called drawdown. If they don't have a big winner out of the gates, then it's going to be harder to grow their fund, and they're gonna collapse because eventually they're going to run out of money. Was their strategy wrong? No, venture capitalism has been around for decades, but the point is they didn't have a win to kind of sustain their account, or multiple consistent wins, or they had too much risk per position size. That is the biggest one. Too much risk per position size. And therefore, their account did this, where they never saw any of this, and they only saw this, and they're like, I suck as a trader, blew my account. Well, you might have had the right idea. You just had too much risk. Here's the thing. This is a strategy that I traded. I'll tell you the strategy later. You can see that it made me a lot of money and then made me lose all the money I had. That's weird. I wonder why that is. Well, I have two strategies here, and skipping ahead here. I thought I had a slide in here. I guess not. I know I did. Okay. Skip ahead. I have two strategies here. I have one on the left and one on the right. Now, what if I told you these are the exact same strategies? You're like, what? Well, it doesn't make any sense. You got one account that's down 99%, you got one account that's up 7,000%. What do you mean they're the same strategies? Guys, there's only one number I changed in this strategy, and that was how much the account was willing to risk. One account risked 7% per trade, and one account risked 3% per trade. What strategy or what account do you think, left or right, risked 3% per trade? What do you guess? What one, left or right, and why? Justin said right because he kept losses small. The answer is right. So the point is you need more consistent wins in your trading strategy and in your trading than having home runs. We know home run trading is not consistent profitable trading. I'm going to pick on AJ, the gentleman I had in the last example. He turned $1,000 to $5,000 in like 2 weeks, 3 weeks, just going crazy. Now, there's times we can have statistical outliers, and you can make lots of money. I'm not going to say you can't, because I've done the same thing. But I started to get nervous when he didn't have a single red day in like 20 days. And I was thinking, uh-oh, he is bound for a loss, but he's bound for a big loss, because if he's in the winning mindset and he thinks he can't lose, well, when the door, when losses start knocking on your doorstep and you don't answer, that's going to be a really bad decision. You are going to blow your account. Just like this. You can have tons of great wins off bat. But if you continue to have that same level of risk, eventually it will catch up to you. So the point is, with a 7% risk, at this strategy was its tipping point. 5% was its tipping point. 7% was really a tipping point. 5%, you would have lost about 60% of your money before you started making money. And it would have taken years to recuperate. So the point is, the strategy that you have with the risk that you have, you could have a very profitable strategy on your hands, but because you are risking more than you should, you are losing and the strategy is now void. Crazy, right? Absolutely crazy. So by risking 3%, I now had smaller losses and more consistent wins with more consistent position sizing than with a 7% loss and trying to have a home run trade, because like I said, if you were trying to have a home run trade, you were probably risking an exuberant amount. Okay? So, we know, like look at crypto bros, right? How many of them end up making it out? Well, a lot of them end up, their account goes to zero because, on Elon Ballsack token, they're going all in. They're risking 100%. 100%. If you continue to do that, yeah, you can grow an account very quickly, but eventually, to the nearest thousandth of a decimal, rounded up, it will be 0%. You have a 0% chance of success if you have that much risk. You have a 0% chance if you have 7% risk. Now imagine 100%. Guys, it's impossible. YOLOing your account, if you are risking more than 3% of your account per trade, it will catch up to you regardless. Unless you have a strategy that won't. There's strategies out there that I'm sure could handle more risk, but you have to get lucky off rip. You have to get a couple of those wins to build your buffer. Because if you don't, and you have a 10% loss, and you lose a couple times in a row, you lose 5 times in a row, half your account's gone. Okay? So 20%, you lose five trades in a row, and losing 5 trades in a row is not abnormal. I'm going to show you last week I lost 5 trades in a row. My account go to zero? No. I was starting to get there mentally, like, geez, I'm kind of getting destroyed here. What's going on? But because I had fixed risk, I was able to make it out of the gutter, and I'm starting to kind of climb again. I'm in a little bit of a drawdown. But the point is, back to the venture capitalist example. Are any of these wrong? Me having a 75% win rate with not a great risk reward, or me having really bad win percentage with great risk reward? No, guys, there's no wrong answer to this. There's no correct answer to this. Whatever you like to do as a trader, that's who you are. That is your style of trading. For me, the reason why I'm a short trader is because I would rather have more consistent green days and have more green days and have the occasional bigger loss than I should than being a long trader and having a lot of little red days and having a big green day to outweigh the red days. Really, in my experience, between the strategies I have, that's kind of how it was. It was losses were very common with longing, but they were always so much smaller than your wins. And when you have a win, it would outweigh like 3 days of losses. When I was a long bias trader, my average week, my genuinely average week, I'd have 2 red days and 3 green days. Or I'd have 3 red days and 2 green days. But the 2 green days, I'd make like 5-6K, and the 3 red days, I'd lose 2-3K. So I'd make 2 to 5K a week. That was during COVID. And that was fine. And the market cooled down, and then really ended up having 3 to 4 red days a week with 1 green day. Still making money. But it would kind of get at me mentally when I would lose 4 to 5 days. It's hard to kind of want to be motivated to get at your desk when you know that, there's a 2/3 of a chance that you're going to end red on the day. Like, all right. But I was still profitable. The strategy still works. In fact, I made more money longing, a lot more than shorting. But the point is, the reason why I'm still shorting and why I'm going to continue shorting in 2025 and beyond is because for me, I'm a guy who would rather be green more often than not. And that's just kind of how I roll. So that is the point. I look like Shrek. I still don't know what happened to my neck here. That's kind of crazy. But there's no right or wrong answer to this. It's what you are as a trader. Are you someone who doesn't mind having the risk? Are you someone who needs more consistent green days? But when you have because shorting, Mr. Big Loss will start knocking on your door eventually. I have it on video. Pete and I were just talking about it, but Pete, I actually have it on video if you're still in here. I have it when you were green. In a lesson, I said, everyone loses, but I was like, seems like Pete never does, because you had like 3 months of straight green. And you're like, don't worry, bro, a big loss is coming, and I know it. And I literally have that video, and you had a decent loss like a week later. So if you're someone that could stomach a big loss, here and there, but your consistent green days greatly outweigh your loss, then shorting's for you. So it's more consistent growth. See that? See how the consistent growth, but right here kind of took away like a month or 2 to 3 weeks of gains, and it kind of continued higher again. This is what shorting was kind of like. I'm not laughing at that. Yeah. Yeah, definitely. I mean, really, put it this way, the only rule that you necessarily broke in that whole day was wiring in more money. You have, Pete. Pete he trades in a 50K account usually, and kind of lost 50K account. That's why you do it, right? You only maximum lose 50K. Guys, Pete's not like the average person. He can handle 50K loss. You would have been out of the drawdown already. So I think you would have bounced back within 3 weeks. So that was really the only mistake. But that's why I have max loss requirements. Okay, we'll talk about that in a little bit. So, we good here? Moving on. Now, what this means is we need to find risk. If you are someone that is newer, you need to redefine risk. Because if you don't have defined risk, I don't like picking on the same dude. I feel like I'm bullying. But AJ gave back some of his gains today, or on the day. He was green and then he ended red. And a lot of guys lost on JTAI today. A lot of guys in chat lost on JTAI. Particularly AJ did. And he had a good green day going, and then he ended up having a little bit of a red day. And the only reason was he did not have defined risk. If you are a new trader, you need to have defined risk. If you are getting into trades and you are not clearly identifying your risk before you enter, you're already planning to lose. If you guys don't have defined risk, you will lose as a day trader. Period. I'll say it. If you do not define risk, you will not be a profitable day trader. That's just the point. You guys need to define it. Period. So for me, lately, it's been a maxed, certain percentage. Now, the other things we need to define are entry signal or signals. So why are we entering? Oftentimes, there's multiple things. Today, I can go to a trade that I was talking to Pete about. And I was like, yo, Pete, this is a pair short. And then he said, it's not letting me show it. He said, insane pair short, Pete. And then scroll down. He said, in a beautiful high day clear out too. So point is, there was multiple entry points for him to take it. And he would have sized up in that example. So you might have, and you most likely will have, multiple entry signals. And based off the entry signals, you can determine your position sizes. You need to also define your exit. What's your exit plan for profit? So this one, you don't have to always have desired price targets. I'm not someone that's always like, oh, I'll just sell all at 10 or I'll sell all at 11. Usually there has to be like more of a reasoning for that. And we teach our masterminds imbalances, if there's breaking of any type of structure, certain things that will kind of make you realize more gain. Not just, I don't believe in like, hey, yeah, my price targets are 8, if I'm shorting, price targets are 8, 775 and 750 and I'm out. So I don't really believe in that. There's a lot more to trading than just picking numbers that make you feel good. But when I say having a defined exit signal, having a plan of exiting, period. And then having defined risk. And what I mean by that is exit signals don't always mean that you're going to make money. Okay? So you can have an exit signal and you lose money. Define risk. And the last thing is you need to have back-tested results. Those are the 4 things that make me want to take a trade. The strategy works, and I know it does because this and this. I'm going to enter because this and this. I will exit if one of these 2 things happens. I exit for profit because this and this, or I define my risk and I stop out. Period. That's a strategy. That's what makes a strategy. Yes, I almost always do partial exits, Justin. I should be charging for this. But I'm drinking a beer and we're talking about it. But I'm not going to charge. I'm not going to charge for it. Okay. Here's the one that I've been working on. Here's the newer strategy that has been newer. Don't look. I exposed. No, they're going to screenshot it at this point. So my gap filters are a stock has to go up 70%. It needs to have at least 2 million volume. It needs to be at least 50 cents or more. The market cap has to be below 10 million. And that's kind of a weird one. People don't like that. And I've backtested both, and I can explain in another day why that is. But that is my backtested results. Some dude's like, yeah, I got the strategy amount. And then based off of the 5-minute time frame, I love using the 5-minute. This is how I can define my entry and exit signals. Notice my risk. It's 3%. 3% cumulative risk. So I can continue to compound my account and grow it, which means you're usually going to have either fixed or a cumulative risk. A fixed risk means no matter how big my account is, my max loss is $200. Or cumulative risk or my max risk for this is 3% of my account. Now, if you use percentages, more than likely your account will hit greater drawdown, but with percentages, you will make an absurd amount more money as opposed to having a fixed risk. A fixed risk will be more consistent gains, and you won't have much of a drawdown. I can probably get maximum drawdown to like 10-15% with fixed risk. Actually, I can check it after this. But with a cumulative risk, you will make much more at the end of the year. So, again, what would you rather have? Would you rather have more consistent and reliable income, or are you someone who's really trying to grow the account to the best of their abilities? Okay. And then my 2 exit criteria. First, my entry, I need to have this, and I'll show you what this looks like. And you have a bar close that is less than the previous bar low, and then the time of day needs to be before 10:55 a.m. And there's a reason for that. And then my exit strategy is 3% below high of day. The reason I have this, because if you guys haven't started trading yet, and you put your risk right at high of day, every trader in the planet in planet Earth is putting their risk at high of day. So when your risk gets filled and your stop loss gets filled, so will everyone else's, and that's why stocks rip when they take high of day. Okay? Makes sense? It's gonna take high of day and rip, and then you're gonna have a terrible exit. So for me, I'd rather stop out earlier and have my stop a little bit below high of day. Now I know if a stock fakes out or if stock makes a higher low, or sorry, lower high, there will be times where I'll be frustrated with myself and like, man, I wish I put my stop loss over high day. But no matter what you do, you'll always have that, man, I wish I did this, man, I wish I did that. Hindsight's a B word. And then my exit conditions for profit is either I stop out or I cover at close. Okay, let's look at some examples. VLCN, this was a nice one. So there was no candle that was lower than the previous bar low, or the candle closed below the previous bar low. This one closed above the previous bar low. This one closed above the previous bar low. This one closed above the previous bar low. This one did not close below this previous bar. This would have been my entry if it closed right here. And eventually, if this candle right here finally closed below this low. Went short. I covered at the end of the day. Nice gain. This red line was my risk. I got in at 8. I was risking 980. And my take profit was 3. It's pretty nice. JTAI was another one. I did lines because this was days ago. I took 2 trades on it. First one I entered, okay, because the previous bar right here closed lower than this one, and then it ripped, stopped me out, and then this candle closed lower than the previous one, so I entered right here, and then I held it to close and took profit right here. So this was a gain. This was a loss. This was a 50% or 50 cent a share loss. This was an 80 cent a share gain, resulting in 30 cents a share in profit. Okay, because my strategy allows one re-entry. I'm allowed to take the trade twice. If I lose twice on it, I'm done. Another one, shorted when this made a previous bar low, and I closed I shorted from 125 down to 75 cents. Great return, and my risk was like right here. Another one, the candle closed lower on AMOD, held the rest of the day, closer profit from 450 to 311. Risk was 537, but my risk would have been more like 5 in this one. Let's look at some losses. Candle closed low. I risked 3% below high a day. It filled me for a stop. This is exactly what I was just talking about. If I put my stop loss right at high a day, guys, the reason why this had an imbalance candle was because every short trader and their mother had their stop loss at or above high a day. So it filled all the trader stop losses and squeezed. I'm telling you right now, if my stop loss wasn't 3% below high a day, it probably would have filled me right up here. And I would have doubled my loss. Just because I didn't have my loss below high of day. Okay? Everyone's doing that. If everyone's doing that, you probably shouldn't do that. Why? Because most people lose money trading. Period. Here's another one. Shorted. Covered before it took high day. Yeah, it faked out. And it was frustrating. Like, man, I should have held. So re-entry off of this candle being lower. And then lost again on it. This one was a double whammy. This was more break even. This one was a loss. So out of about 409 trades, 254 were green, resulting in the average profit being around 1,200. 37% of them were losses, with the average loss being around $1,000. Winning days, 71% out of 28%. And then back tested the strategy last 14 months, and technically it would have been 14 months green in a row. Do I believe that? With commissions? Hell no. But it still was a very consistent green strategy. And look at this is more than what I wanted to highlight than the fact that it had 14 green months of back tested green. Because like I said, I do question that a little bit. with locates, even though I did factor in um, about 5% per trade goes to my locate and goes to my slippage. So 5% is pretty steep. 5-6% say is average. So these are very average numbers when it comes to. I could have really juiced these up for the video, but I didn't. So the point is, what I want to show you guys is with a cumulative risk. Look at this. January, my wins were small, 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 small. Got bigger and bigger and bigger. But as you started to grow your account, this is what's really cool about this. What you made in the last 2 months would have equaled almost the exact same of what you would have made in the last 12. Because as your account grows, you should be making more money. Okay? You should be risking more. You should be rewarding more. With a cumulative risk, that is how the snowball effect works. Now, there will be a point where I will not be able to size in 250 grand per trade. So I will have to eventually go to a fixed risk. But for now, if I'm trading $2,000, why wouldn't I do a cumulative risk? Why wouldn't I want to grow my account, right? And this is something that I have in my room outside my office. I see this before I walk in every day. And this is my calendar to win the year. Even though I had three red days in a row right here, and I was getting on myself, I was getting pretty pissed. I didn't even trade on Friday. Didn't even trade. And I had a PC student with me this whole week. That wasn't really a fun week to sit next to me and trade. But it was good for him to see that. It was good for him to see that, yeah, I lost 3 days in a row, but, it didn't affect me in the slightest. A little bit, I was like, you know what, this kind of stinks, but I was able to walk it off, and he was utterly shocked. Why? Because I look at the year. Guys, this week is such a small amount for the entire year. You need to be trading to win the year. So many of you guys trade to win the day, and it's crazy. It's absolutely insane how many people are like, I'm just going to trade to land green today. What the blankety blank are you doing? You're hurting yourself more. Trade to win the year. There's no reason in trying to trade to be green on the day. You need to trade to be green on the year. That's it. Period. Okay? There will be more opportunity. So zoom out when you have a red day and go, well, it's not really that bad. Now what's next for you guys, and I want to talk about this for a little bit, is, like I said in the beginning, you guys can decide to take what you want from this and hopefully apply it to your trading, and hopefully it helps. I really think it would. But if you guys are just getting into trading, you guys now know a small enough amount of knowledge to do either really good or a lot of damage. Because if you guys don't continue with your education and don't continue with being part of a team of accountability partners, so you can sit next to me and I can say, hey dude, what are you doing? That's not the right thing to do. You need to be doing this. Well, that is the opportunity for you guys to take the next step. Now, for you guys who are still here, I'm going to offer something to you guys to help you guys win your year. I'm not going to, try to do some crazy sale or something for you guys. I'm going to give you guys a little bit more value, and if it makes sense, then you guys can pull a trigger. If it makes sense for you guys, absolutely. If not, no harm, no foul. I really hope you guys learned something from these 3 days, and it's been a pleasure teaching you guys. But what I want to do is I want to give you guys each, who's still here, a free month to our brand new trading journal that we just launched. It's still private. I haven't really made a ton of announcements about it. But because you guys have been here for 3 days straight, I want to give each of you guys a free month to our new trading journal platform to help you guys document your trades so you can focus on winning the year. That's everyone in here. So I'm going to need you guys to either DM me on Discord or on Instagram a screenshot of you being in this lesson so I can give you guys a free month. Now, we haven't even launched it yet, guys. It does have we did hook up automated journaling for Hammer. So if you guys are on Hammer, it will be completely automated. Also, if you guys do crypto, it has BitUnix. So we have 2 automations. We also have automations from all the major platforms. Thinkorswim, Webull, tastytrade, Interactive Brokers. We have pretty much a majority of them. But I want to give you guys a free month to show you guys even though I just gave you 3 days of my undivided attention and strategies for free, I want to give you more value, more. Okay, and then the last thing is I want to give you guys a free one-on-one. I want to give you guys a free one-on-one from either me or from one of our head traders to see how we can help you in your trading. And then at the very end, if you want to talk about joining the team and working with us for a full year and having not just 3 days, but 6 weeks of education with us, then we can help you guys out. I know for a fact there's so much more that I could teach you guys. If you guys think you learned a lot in 3 days, give me 6 weeks of your undivided attention, and I could turn you into a beast of a trader. Okay, we just did that with the program with the last guys, and we just ended it. But I want to help you guys even more. So don't even worry about putting the credit card up or even thinking about it. I want you guys to be like, you know what? I'm going to take what I learned tonight. I'm going to take my free month of my trading journal, see what they're about, and then I'm going to book my free one-on-one with the team so I can see even more how they can help me and if I like their education style. And if I don't, well, guys, still be a free active member in our community. You guys are awesome. I'd love to see your face more. Maybe eventually you'll come around. You'll join one of the in-person events. Again, I know all these guys by heart. They're all students of mine. I can name their Discord accounts, where they live, their trading style, everything about them. Okay, but that's up for you guys to decide. I want you guys to be completely in love with our education and our group, so there's no question that you're making the right decision. Okay, so I'm gonna drop my one-on-one calendar here, and I'm gonna have you guys book. Now it does only have availability from 11 to 5 p.m. EST. So if you guys need times outside of that because you have a 9 to 5, I get that. If you want to book a call with me directly, use this one, and that's gonna be the one from 11 to 5 p.m. EST. You guys book it as soon as you can. You're either gonna talk to me or one of our head traders, either me, Noah, or Jimmy. Okay, and we're gonna hook you guys up. I honestly, guys, you know what would be easier? All 19 of you guys in here that have the lesson, book the call, and then during the call, we will also set you guys up with a trading journal. It would be so much easier than like, hey, I was in the lesson, take my word for it. Book that call. We'll help you guys set up that journal in that call, so you guys can have your free month. Okay? Does that work? Well, cool, guys. I really hope I can work with you guys one-on-one. I know I've seen a lot of your guys' faces and names around the Discord. You guys seem like awesome dudes. You guys have been great. Honestly, you guys have been just as interactive, if not more interactive, than some of the masterminds I've done. So I applaud you guys. You guys joined 3 days in a row out of your own time, and you didn't even know if I was good enough to teach you guys. You might have been like, dude, I don't know anything about this guy other than the fact that he's a jackwagon on Instagram, but I took a chance on him. And I'm really glad I got a couple hours of your time this week, and I hope it was worth it. I really hope you guys learned something. I'm going to open it up for questions for the next 10 minutes, but Noah, I did just pull in, so I'm going to go say hi to him. I found you as someone pretending to be you on WhatsApp. W. At least you found the real me. So what questions do we have outside of... I'm an absolute newbie in the trading world. What do you recommend I watch, read to learn all the basic vocabulary in trading? Are there starter videos on the good YouTube channel for that? Yeah, Danny, if you just go to our Discord, and you go up to right here, stock course, there should be 8 lessons. I actually pasted them from last night's lesson right here. That will get you complete noob. You can learn. But everyone here, if you guys want access to the Trader Journal, book that call. Let me see if I got. So I got Ali just booked. I got one of you guys booked so far. If you guys, does anyone need Scotty? Does anyone need a calendar outside of 11 to 5 p.m.? Like, is anyone not finding proper time to talk to me? Because I can get another calendar for you guys. Again, guys, now you have my undivided attention. You need to be in front of the PC for a call. As long as you join on your phone, Ken. Um, Laptop or PC would be preferred for the Trader Journal. I haven't tested it on the phone yet because if you're gonna if you're gonna paste your trades from Hammer or the broker to it, I'd plan on you guys probably being on your computer, but you can use a phone. So I got Ali and Scotty just booked. Colin, I haven't seen you book yet. Maybe it's kind of being delayed. Let me just check my calendar. Okay, I got Scotty tomorrow. I got Ali Monday. I got Colin for the 24th. Does that sound right? Cool. Alrighty, guys. Mine says the 24th. Um, David just booked. Cool, guys. Well, I'm really excited to talk to some of you guys. Again, if you guys want access to the 1 month free of Justin just booked. Also, in that call, I can assist you with Hammer. For Hammer, do we create our own username and password, or is one being emailed? Your username will be your email that you use for the account, and then your password you'll set. Oh, you're okay. That makes sense. Cool, guys. Do a promo code for Hammer. Colin, if you use the packet I sent you, it will auto apply. So no need. Do we have to use Hammer? No, Justin, you don't. Would I recommend it? Absolutely. But if you have another broker that doesn't require 25 grand for you to day trade and you can short on it, then go for it. I'm not going to tell you trade zero in Canada. I'm going to put my pride aside and say yes, you can use Trade Zero in Canada. That platform screwed me over big time a couple years ago, so I try not to promote them when I can, but they do have a good product 90% of the time, so it works. If you're already on the platform and you're happy with it, then use it. Trade Zero sucks. Yeah, Pete. Cool, guys. Well, I got 1, 2, 3, 4, 5, 60 guys. 60 guys booked. I'm really excited to talk to you guys. Again, if you want to continue in your education with us, then we'd love to have you. Book that call. We'll talk about that at the end. And again, we literally will put. If you think the last 3 days were good, then imagine what 6 weeks looks like, especially one-on-one. And it ain't just with me; it's with Pete too. So. That's it for me, guys. Danny, last question. And then give us a proper send-off. Is what I learned about stock trading applicable to crypto trading? Some of it, yes. So, for having to find risk and all of this, absolutely is the same. Is this strategy going to work in crypto? No. Are you going to be able to look up dilutive potentials in crypto? No. So half of it will be transferable. Randy, are you trying to sign up right now? Are you in the US? Okay. It's not going to let you. I have to do it for you. They only accept members who are in the US that are students of mine. So I have to send you another link. Okay. Here, use the link I just sent in there, Randy. That is the Hammer onboarding link. That's the packet you gotta fill out, and then once the packet's filled out, that gets automatically sent to Hammer. They reach out to you via emails. The guys who filled the packet out on day 1 just got their emails back yesterday. So you'll hear if you fill them out tonight. Oh, if you already did it, then you should be good. check your email for anyone from Ace Trade. Ace Trade, particularly Valentine. Ace Trade Valentine. He should have emailed you with one final thing to sign, and then you're good. Your account will be created. Look in your email. Check your spam. Sometimes Ace Trade went to spam. Got it? Cool. Alrighty, guys. Appreciate your time. I'll talk to you first thing tomorrow morning if you guys join the team and decided to continue to trade with us. Really excited to work with some of you guys. If you guys want the free one-on-one, the free journal, and then possibly talking about being part of our team beyond that, book that call. You'll talk to me or talk to one of our head traders directly. I'm not going to put you in touch with some random dude. It's either going to be me, Noah, or Jimmy, the 3 traders. Okay. If not, then you could sue me because I would have lied to you. Alrighty, guys. Have a great night. Good luck in trading. Talk to you soon. Peace.